Yes, we'll wait just like 3 minutes and then we'll start. Yes, so I think that we can start. So we'll start by looking at the news of the day. And as you can see, we have had Amazon's earnings yesterday, and they were fantastic. And actually, the big tech stocks, they have all done really, really well. However, the Nasdaq is basically in a dip today. It's down 0.70%, give or take, nearly 1% down. So even though Amazon is having extremely good earnings and it's up roughly 2%, the other big tech stocks, they are basically falling in the Nasdaq. But if you look at overall in the market for commodities, for example, especially the energy sector, that is down. You can see that natural gas is still increasing. It's up 1.24%, while oil, WTI, and also Brent, they're down 2 and basically 2.2 and 1.9%, a fairly big fall for the energy sector. Otherwise, there's nothing really interesting in the main commodities I usually look at. If you look at foreign exchange, there was some bad data from Europe today, from the European economy. Actually, the Eurozone is technically in a recession still, and German economy fell more than expected. Looked at in the economic calendar in a moment, and that of course affects the value of the dollar, not the dollar but the euro, and the value between the euro and the US dollar. And you can see it's down 0.23% as well. And the Great British Pound US dollar is even more down, and the reason for that is probably because it's running into major resistance. People that saw my foreign exchange video yesterday, it has problems getting through the upper resistant level, and is pulling back most likely towards support at the 50 moving average and below that. So if you look at main news here, we can see that Twitter is having a horrible day in pre-market. It is down roughly 13% in pre-market. So an absolutely massive drop for Twitter. It has been on a massive rally. So of course there's just some bad news that has to occur in order to get Twitter for a stock to basically tumble. And at this moment, the bad news was basically that their earnings were not as good. So Amazon is up in pre-market 2%. Apple is down 1.1%, 1.2% at this current stage. Energy sectors, as you saw for oil, it affects the energy sector, is down 2%. ExxonMobil is as well not that far, 0.5%, while other majors are not here. But especially Apple, Amazon up due to earnings, and Twitter is massively down to disappointing, basically, earnings. So elsewhere, you can see that Chinese tech in general is down today. It's Amazon that is up, but otherwise other tech is technically down. Apple is down, Google is also down, and Microsoft is also down, and Facebook is also down pre-market. So it's 1%, and pre-market usually ends at 0 or a little bit above that. But it is to be seen. We'll look at the Nasdaq futures in just a moment, and they are hovering right at the middle of the Bollinger Band and is finding the support right there. But We'll see in a moment. eBay is also down 0.39%. But if you look at China, so I did do did buy Chinese stock, and at the moment China is basically cracking down on their, well, most of their big tech stocks, and that is never good. If you look at China 50, it is down, and probably the reason for that is because of the Chinese crackdown on their big tech stocks. So they're imposing more regulations, and also in Alibaba's case, they were basically finding Alibaba, but they're just making stricter rules. It doesn't mean that in the future that this will continue to break down, but when news like this occurs, more regulations usually is bad news for the market, and it will retract at that point. So it is affecting Alibaba as well. It's down 1.5% at this current stage. So yes, it is not the best in the world. So if we look at, for example, the euro. So Eurozone is also currently in recession, falls back into recession. So if you look at you're going to the economic calendar, you can see that the Eurozone, especially the German economy, you can see it here, GDP first quarter, it is down minus 1.7%. Expectations was that it was going to be down minus 1.5%. So, well, it fell even more than that. And usually these numbers are very accurate. And when it basically falls more than expected, then it has quite a big shock into that system. You can also see that Eurozone here for the Eurozone, it is still in green, but it's still minus 1.8. It's not a good sign that your economy retracts minus 1.8%. If you look at other news, we have this will most likely affect the Canadian dollar. We'll have a look at that in a moment. That GDP in February basically was down by 0.4%. But otherwise, it is a recount, and this will have can have an effect on WTI and also on natural gas, whether or not there are more rigs or less rigs. So that's always something that people look at on Friday. So we can look at the Nasdaq, and this is basically the daily chart for the Nasdaq. And as you can see, most of these technical indicators are turning around for the Nasdaq. We're still in bullish territory. We're above zero here in the MACD, but you can see that we have crossed here in the Nasdaq, and that is an indication that momentum is to the downside in the MACD. You can also see in the stochastic, it is also tumbling towards bearish territory and was rejected at the basically crossing here. If you look at RSI, it's down at 55, so it is basically in the middle of things. So where it's finding support is right here at the middle of the Bollinger Band. So we did have a crossing of the 9 moving average and the 26 moving average here over in the Ichimoku cloud, or just a cloud as I usually call it. And since then, since there's a crossing here, we have had a bullish run all the way from give or take 12,941 and all the way up towards the highs here of 14,053. At the moment, we're pulling back, and you can see the distance between the 9 moving average and the 26 moving average. There's a massive distance between those. So it doesn't mean that we are going to have a crossing at this point. If we are going to have a crossing, it's going to take several days before we have that crossing in order to determine that this is a selling signal. So it's never a good idea to sell the indices anyways. You have occasionally these falls, but it's like finding a needle in a haystack in order to find these falls. Better choice is basically just to wait until it falls to major support and then just buy it. So at this current stage, it is in a rally. We had a head and shoulders pattern here, and it should rally further, considering that the distance between the shoulder and the head here is should rally up towards at least 14,500. That is to be seen. We could always have bumps on the way, but technical indicators are not 100% accurate, so always keep that in mind. But if we were to break the middle of the Bollinger Band here, this could drop towards the neckline. So it could drop towards this area here, which is roughly at 13,330, give or take. So one of the main reasons why this is going to be a major support is because this was a significant resistance in the past. So we can see this, how often we tested this and we got rejected. We tested it also here and got rejected, and until we basically broke out of this resistance over here. And this was basically in 1st of April when we broke out and we had a crossing here of the 6 moving average and the 20 exponential moving average. So if we drop back towards this level, that's a fairly big drop, and we'll also drop towards the bottom of the Bollinger Band, which is here at 13,592 at this current stage. There's a lot of resistance underneath, right in this area here. But technical indicators, they are pointing to lower levels. If we look at 4-hour chart, you can see that we are having a crossing of the 6 moving average and the 20 exponential moving average here in the 4-hour chart. We're also approaching the bottom of the Bollinger Band and are pulling back. So that's the reason why we are seeing a stagnation here of this fall in the middle of the Bollinger Band, because we are also finding major support down here. This was also an area yesterday where we basically fell and rallied. So it was down at the same level at 13,821. So if you look at technical indicators, we can see that the RSI is at 32. The stochastic is very bearish. The CCI is, the MACD is also bearish and is also in bearish territory. So a crossing here usually means that it is a selling signal, and then this will basically fall even further. So we could have a sell-off in the Nasdaq futures when the US, a further sell-off when the US session opens. And that is only in 15 minutes time. So that's going to be interesting to basically see what basically happens there. Considering that most of the hype of earnings should be over at this point. So the big tech stocks have all released their earnings, and you can say that the most of the firepower that was in that earnings has been already been adapted by the market, and there is not much more good news that can be released. So including that Biden's tax policies will most likely not be beneficial for the stock market. That could also weigh in and affect the market negatively. So you'll basically see, if you look at the 4-hour chart, it doesn't look very bullish at this point. All technical indicators are bearish. We have a crossing here of the 6 and 26, the 9 moving average and 26 moving average, and that usually is a bearish sign. We can also look at the 1-hour chart. We can see that we have a crossing right here. So we did rally, broke down, and then we have a crossing here of the 9 moving average and the 20 exponential moving average. And since then, we have basically been trending sideways. Yes. So let's look at the foreign exchange market, because that is where we here. So I'll leave this for a moment. So there is quite a lot of movement in the foreign exchange market, and I think that was fairly interesting to look at the Great British Pound and the US dollar. So first of all, the US dollar is appreciating today, and that will affect the Great British Pound US dollar pair negatively. So there will be bearish momentum. And we also have quite a lot of bad data from Europe. Even though it's basically Eurozone, it will also, it is in general also, can also have an effect on the Great British Pound. So we are also, from a technical standpoint, also running into a major resistance at this trend line. So we have tested it, we went from here, we tested it right here, and we tested it yet again the last 2 trading days, and now we basically break down towards the 50 moving average, which is here at 1384, or the 100 moving average. If the 100 moving average breaks, then we are most likely going to drop back towards the previous lows, which is all the way down here at the 150 moving average. You can see that we tested it there, we tested it here, and this was also an area with a lot of support and resistance in the past. So 1366 and 91 is an area that has in the past been massive, support. You can go all the way back here. That was a major resistance area all the way back. This was in 2018. So it's funny to look back in time and see that we're running into the same points as we did basically in the past. So there is another line that we can draw up here, that is this, that we are running into this triangle pattern. You can draw it up like that, draw it up like this. And usually what this means is that we will, in the long run, in the next, this was all the way into May, 20th of May, we'll probably just trade sideways into this corner. So at some point we are going to break to the upside or break to the downside, and it is not possible to say where we are going. There is a lot of support underneath. As I said, this area here has proven to be significant support. If we were to break down towards 250 moving average, it will most likely bounce from there. But that also means that we'll break below this support line that we have drawn up here. What I think is going to happen is that we're going to just go back and forward and into this corner, and then we'll drop down or we'll drop to the highs. If we were to break to the highs, then we'll most likely run into major support resistance, up here at 1424.51. So this is should be major support at this point, and this should be major resistance, and we'll most likely trade into this corner and then either break to the upside or break to the downside. Otherwise, it is a fairly good trade if you manage to catch this. This is a move of give or take 346 pips to the upside, give or take, and this is a move of 212 pips to the downside. So yes, if we look at technical indicators for the Great British Pound and the US dollar, we can see that the MACD is still in bullish territory. That is a bullish shine or bullish momentum, and we are about to cross the signal line if this breakdown continues. So it turns around here, and that will basically be an indication of a bearish momentum. RSI is turning around, and that is an indication of a bearish momentum. Stochastic, and now CCI is at 19, so it's above 0. It is not very bullish, but it's not underneath here. When we get into above 100, that is a bullish territory, significant bullish territory, and under 100, minus 100 is bearish territory. Stochastic, you can see that we are turning around here, basically cracked, and then we're heading and crossing the signal line, indicating bearish momentum. We are just above the top of the middle of the Bollinger Band. If that basically breaks, then we could drop towards this support line. So otherwise, there's not a lot of movement in the US Japanese yen. That is just hanging around at the same place. The euro US dollar, it is finding resistant right here at 12.1499. But technical indicators for the euro US dollar are looking fairly bearish at this point. You can see the MACD is turning around, and it's most likely going to cross the signal line, indicating bearish momentum. RSI is very bearish at this point. CCI is turning around towards 0, also becoming bearish, and also the stochastic is still in bullish territory, but has crossed the signal line and becoming bearish. So we'll probably, if this continues, fall towards the middle of the Bollinger Band, which is right here, and this is a drop off in 70 pips. So give or take is 0.598%. We are having a crossing of the 20 exponential and the 100 and the 150 moving average, and those should all be considered as bullish signs. You look at this as from another perspective, and that is that we are basically making a channel here, and that we are right in the middle of this. So we can draw it up like similar to that, and that we are right at the bottom of this channel. So we could also see this pull back towards this channel and then rally to the upside, because this looks like an upward trend, and it's a very steep upward trend. And if we were to find support there, then this could continue towards the upside, and we'll most likely find major support up here, which is around 12.1754. So we can see that this was an area where we have tested several times and have broken down, and therefore it should be supportive, also resistant in the coming future, if we get to that point. So it's not that far away. So where we are at the moment, up towards those support level, it is give or take 0.79% to the upside, or 95 pips. If we rally from there all the way to the top, that's a rally of 280 pips, or 2.32%. If you look at, for example, the 4-hour chart for this, we can see that we are pulling back towards the 50 moving average, and we're just hovering right at this 50 moving average and this support line. So yes, it is going to be interesting whether or not this continues. It has been rallying, breaking down to the 50. It's easier to see it in the 4-hour chart. If you look at other 4 different time frames, you can see that this is a really nice upward trend in the 4-hour chart, and you can also see it here in the 2-hour chart. Very similar. We have basically fallen towards the 100 moving average in the 2-hour chart and just continue rallying there. If you look at the hourly chart, very similar here. It is bouncing off the 200 moving average in the 1-hour chart, and in the half-an-hour chart, we can see that the same is for the 200 moving average. It has occasionally broken below the 200 moving average and then continue rallying to the upside. If you look at the cloud, for example, we are above the cloud, indicating bullish momentum. We did have a crossing down here of the 9 moving average and the 26 moving average, and since then we have basically been rallying to the upside. The distance between the 9 moving average and the 26 moving average is quite significant, so there's no real sign here that we'll break significantly to the downside. Yes, so let's look at the technical scan for companies that most likely are overstretched at this point. So we'll look at the companies that have very low RSI and also are significantly outside in the Bollinger Band. And in the Nasdaq, there are 3 companies. Probably look at the S&P 500 first, or the foreign exchange, because I think there was only 2 at this current stage. So Great British Pound and the Canadian dollar. So here we have an RSI of only 12, and we are significantly overstretched here in the Bollinger Band. So this has been absolutely tumbling, and we are trading right here. And this has been an area of of importance in the past. You can see it right there, and also right here, and also here, and so on. This has been an area where it has found support in the past, but that doesn't mean that it won't fall even further, because you can see right here it can fall significantly further before going higher. Right here, You can see that we are right there, and we are significantly lower in the, for example, in the MACD before this turns around at that current stage. So Great British Pound, Canadian dollar, it is falling completely apart and has been from the top here all the way down to the bottom. It's a drop of 556 pips or 3.16%. So other is the, for example, Euro Canadian dollar. That should be also a very great correlation between those two. But here is probably easier to see where we'll probably have a target, and that is right here at 1472. And at this current stage, we are quite far away from that target. We are 100 pips still away from that target. It has been falling from the top here all the way down to the bottom. That's a fall of 352 pips or 2.32% to the downside. RSI is extremely low. So this is getting to an area where RSI is 0.2%, 2 at the point, extremely low, and we're also fairly overstretched at this point. So let's look at the S&P 500 because there are not that many companies that are this oversold. So first of all is Gilead Science, and we have an RSI here at 27, significantly outside of the Bollinger Band, and I haven't looked at what pre-market looks for this, but it's going to open in a moment. So how about... So Gilead is down 2.58%, so down to $62 a share. So 62 is down, well, 62 point down here at the 300 moving average. So it is going to probably gap down when the market opens, and it will probably test the 300 moving average before when the market basically opens. That is going to be in 1 minute. Other technical indicators, you can see the MACD is very bearish, the CCI is very bearish, and so is the stochastic. So this has fallen to around this area here. This is at 61.49, and that is probably where we are going to at this current stage. So we did rally yesterday, but it could drop another 3.49% before finding major support. So we look at this from here. So we're running into resistance yesterday at the 100 moving average, but as I said, pre-market is even lower. It's down here underneath the 150 moving average. But in the past, it has fallen towards 61.49% before basically turning around. So I wasn't basically wrong. I was on the 4-hour chart. So RSI number is not that bad at this current stage. So next is Caterpillar. So Caterpillar also fell significantly yesterday. We are significantly outside here of the Bollinger Band. So this is a company that is going to most likely going to rally significantly next year due to the infrastructure plan that Joe Biden is going to implement, and that will just need a lot of construction or heavy construction that is going to benefit Caterpillar. Just look at Caterpillar in pre-market, and there is technically no news in pre-market for Caterpillar. So yes, that is going to be something I'm going to look at. So Tyrrell Technologies, and here we can see that we have RSI at 3.7, significantly outside here of the Bollinger Band. So in the past, the 150 moving average has offered support. We can see right here. There had been this occasion where we basically fell off a cliff. There's a drop of give or take 22%. And we have fallen the last 3 trading days of give or take 7.6%. But we're running into resistance here where we have run into resistance in the past, and that is at the 150 moving average. Otherwise, other technical indicators are all turning around. If you look at, for example, the cloud, it's a crossing here. There is not a crossing yet of the 6 moving average, 9 moving average, and 26 moving average. So that is to be seen where this is going. And for our chart, there is a crossing of those moving averages, and that is an indication of a selling signal. So it's going to be interesting to basically see what happens by this basically open. So it just opened right now, and it should be on this screen in a minute or two. So we're going to look at the next one. This one is Merck & Co. And this also fell off a cliff yesterday, and now we're trending at, give or take, right here. This is increasing and increasing, and this should be, I don't know why this is not updating right now, but yesterday we fell all the way down to 1673, and we are fairly low in the RSI, and the same here for the Bollinger Band. We're significantly outside. So in the past, it has found major support down here at the 71, and we're quite far away from that point at this current stage. So let's look at Merck here. So it's barely up 0.07% at this current stage. So yeah, it's kind of rallying. So we can look at here. This was Citrix Systems, and this also completely fell off. So this is, that should be rallying today. And if you look at this, is CTXS. It is currently not trading at this current stage. Not this current stage. So, yes. So we'll have a look at it. But we're on RSI at the 23, and you can see how far we are basically outside here in the Bollinger Band. This has found in the past a major support down here, so down all the way down to 112. This will definitely have a pullback before going towards those points. We were in a fairly good uptrend. This probably had the bad earnings, if that's probably the reason why this fell this hard yesterday. So let's look at the whole, and this was also a very interesting one. This fell, give or take, yesterday from here all the way down towards this point, gap down, and then 9%, so drop of 9.5%. And it's currently on the edge of being oversold, and we are significantly outside here in the Bollinger Band. So this could pull back as well. We do have a crossing here of the 9 moving average and the 26 moving average, indicating basically a selling signal, but this will most likely pull back before continuing lower. Last time we had the buying signal was right here, and we have a selling signal right there and a buying signal right there. So lastly, we have, this was Ford Motors. So Ford Motors fell towards the support at the 100 moving average at $11. So this has been doing really well from the time last year where it was all the way down at the $4. It rallied up towards this point, which is $13. So almost 200% in a year. So fantastic for Ford. But yesterday it technically fell off a cliff towards support at the 100 moving average, and we're on the edge of being oversold at this current stage. Yes. Anybody have any questions? Yeah, so no questions, so we'll just think and end it right there. So hope everybody has a good weekend, and see you on Monday.